Hi, my name is Hector Garcia. I'm an accountant, a CPA, and I've been practicing for about 10 years. Now, in this video, I want to talk about the business model of charging by the hour. And I'm not advocating that you should have a business model that charges by the hour. As a matter of fact, the purpose of this video is kind of to sell you on the idea that you should have a business model that charges based on value. But I want to explain to you the business model of charging by the hour so you understand why is it so attractive, why is it so ubiquitous, why do so many professionals prefer to charge by the hour. And when I'm talking about professionals, I'm specifically talking about accountants, bookkeepers, CPAs, IT professionals, maybe some marketing consultants, business consultants, or even lawyers. These are industries that across the board just prefer to charge by the hour, or they start charging by the hour. So I created this spreadsheet for the purposes of this video. And if you want it, just email me and I'll send you the spreadsheet. But by the way, this spreadsheet is not meant for you to be used to model your business after. I'm just going to use it to explain why people like the business model of charging by the hour. So I took just some examples of overhead for a typical professional services business. We got rent, internet supplies, transportation, miscellaneous software, that sort of thing. And that amounts to $3,000. And let's assume that this professional services business has the owner who's one of the operators and has one employee. And let's assume that this employee cost out of pocket with all the taxes and everything, $4,500 per month. And the owner is going to pay themselves a fixed salary before taxes of $5,000. So we take the office overhead and the salary, which gives a total monthly operating expenses of $12,500. Now, through the magic of cost accounting, which again, I'm not advocating that you use this, but I'm just showing you how it works. With the magic of cost accounting, we are assuming that our employee works about 168 hours a month. That's typical. And let's say the owner works about 200 hours a month, right? And this is based on 8 hours a day for 21 days for the employee, and this is worth an 8 hours a day for 6 days a week, which is about 24 hours or 25 hours for the whole month. So these are realistic numbers about how much an owner works and an employee works. Then I have to multiply what we call the billable capacity. So this is how much time in the day this person is actually spending doing actual billable hourly work. So for an employee, a typical great number is 75%. That means out of 8 hours in a day, 6 hours are actually billable and 2 hours are admin, emails, lunch, getting coffee, putting out fires, dealing with issues, all that sort of thing. And then the owner who works a lot more but spends a lot more in admin, marketing, networking, I'm putting 60%. So I'm assuming that based on these percentages, we multiply their total work hours to what we call the effective billable hours. This is the actual hours during the month that they can work and bill their client in their hourly services. And then I took that number and I divided it by the total overhead. So this is a formula that actually divides the office overhead by the number of employees. This is typical cost accounting stuff. And then plus their salary. And that gives me more or less what their effective hourly cost is. So we need to know what the hourly cost is so we can tack on some profit and then figure out what our hourly rate is going to be. So just for the sake of argument, we're assuming that our employee is going to be billed out at $75 an hour and the owner is going to be billed out at $125 an hour, which will give me a total profit that is displayed here. Then I take this number that you see right there, right? That number, and I take away about 30% for taxes, and we figure out more or less what the owners take home pay between the profits and their fixed salary, what the total number adds up to, and I put it right there and we annualize it. So as you can tell based on this formula, and if you follow all these numbers exactly as we have them with the billable capacity, with the overhead, we can take home after taxes $145,000, and that in paper sounds like a great business model. And this spreadsheet is pretty straightforward. You can add and move the numbers in here and you will figure out what that number is. So because of this, And because most people will understand how this works, the hourly model for charging your clients makes sense, right? Because we are charging $75 an hour on an employee that effectively cost us $45 an hour. So there's always profit there. And we're charging $125 an hour for the owner who's only taking a take-home pay of about $5,000 a month. So it's the math sounds right. But when you charge by the hour, the math sounds right, and the billable capacity, it's about right. So this math just works. Now, why does this work so well? Because the business owner or the business performing the service takes absolutely no risk. In other words, if it takes us 10 hours to do the work or 20 hours to do the work, we're going to bill it at our hourly rate no matter what, because our client agreed to paying that. And there's nothing wrong with that. I mean, if that works for you, it works for you, great. But the challenge is that although this number may sound like a great number, once your business starts getting more complex and you start tacking on more employees and you start tacking on more fixed costs and you start spending money in marketing or actually start giving vacation time to your employees. I mean, once the business gets more complex, these numbers just don't come out the way we assumed they would come out when we did this calculation at the beginning. So we actually create an artificial ceiling in our business when we charge by the hour. And that artificial ceiling is ruled by these numbers right here. The total number of hours we can bill for, our billable capacity, which is our effective billable hours. Even if somehow magically we can turn both of these billable capacities to 100%, which is actually not accurate, by the way, not by far accurate. Even if you could do that and somehow you could pull off with the fixed expenses and you don't spend any money on marketing and you don't have to spend any additional money on training your employees and you don't have to give your employees vacation and you don't have to invest in a lot of technology. Even if somehow we were to pull this off, we still create an artificial ceiling in our potential income. Now, again, the numbers in the spreadsheet for a lot of you will look very attractive. So that's the business model of charging by the hour. It looks great on paper, but why do I advocate for doing it differently, charging based on the value you provide? And just to give you some background, I started my business 10 years ago, and I started my business under the pretense that people want to pay by the hour. Now, the fundamental flaw with this business model, it's we assume that customers like this, and we assume that customers will always like this, will always pay for this, and we assume that our customers are not going to leave us for another professional that will charge based on value, fixed fees, or maybe that there will be so much technology that can replace us that this will be an obsolete business model. So that works under that assumption. So I started my business charging $75 an hour, and I gradually went up to about $250 an hour in about 7 years or so. And then in the last 3 years, I've been moving away from charging by the hour and even billing my employees by the hour and charging fixed fees for our services. Now, when I talk about value pricing, but you have to give me a chance, right? So we're charging fixed fee for our services. When we charge a fixed fee, our new challenge is to get our employees to do the work faster for the same fixed fee and provide the same results. So we invest in technology, we invest in training, but for the purposes of being able to bill our fixed fee that we promised our customer we were going to bill for a specific result and still have the same earning potential regardless of how much time we're spending with our employees with their billable capacity. So when you charge a fixed fee, you no longer have to worry about your billable capacity because that's no longer a factor. You do have to worry about your employees becoming increasingly more efficient. That means they can output more work per hour or whatever you want to call it, but not just efficient, effective. They can output work that the customer likes and the customer enjoys and delivers the results that the customer wants. If your employees can satisfy your customers at a fixed fee, that is the best business model to be on. So let's talk about value pricing for a second. So charging a fixed fee or a fixed price for a service, and let's assume we're going to talk about monthly accounting or monthly bookkeeping. Charging a fixed fee or a fixed price doesn't necessarily mean that you're value priced. Not all fixed fees are value priced, but all value prices are fixed. Okay, and that's really an important component of this whole thing. So your customer needs to know what they're going to pay up front. You as a professional, you will promise you will deliver the result for that fixed fee, and that will be the end of it, right? That's the entire engagement. Now, the part about value pricing is when we actually figure out what the results of our work are worth to our customers. And we do that before we give a price. And the way to do that is to understand their priorities, is to understand what is unique about their business, what's unique about our business, and how the two sum more than the sum of the parts. So by your particular customer working with you, you add one on one together, the result needs to be three. So you have to figure out how you working with your client will deliver a result greater than the sum of the parts. That's a really important component of it. And sometimes this is a difficult, really heavy task. Like your customers are not going to tell you your work is worth $3,000 a month to me. They're never going to say that. Now, what your customers will do is they will tell you what hurts them, what aches them. They will tell you their pain points. And you should be able to figure out, if I resolve these pain points and give you that time back to focus on growing your business, that's what most business owners want when they hire an accountant, a lawyer, a marketing professional, an IT consultant, a business consultant. What they want is they want to give you a task that you can do better than them so they can spend that time doing things that they're better than you at doing or better than the competitors are doing. They want to focus on developing their customers, developing new markets, making their business operations better, marketing more, improving their product with research and development. That's what business owners want. And as service professionals, we need to figure out what is it that they're going to do with that time we're going to free up for them to concentrate on what they want to do. And once we understand what they're doing with that time, then we have to figure out what is the value of that business owner spending more of that time in that business. Think about it. If you're a business owner yourself and and this is a really important sort of mental exercise you want to do. Imagine that the gods gave you an extra hour a day, one uninterrupted hour where you can do whatever you want to work in your business a day. Imagine that for a second, right? Because everybody complains about there's not enough time in the days. Okay, we get it. Not enough time on the day. We get it, right? Everybody has the same amount of time that they're awake and there's constraints. We understand that. Everybody complains about the same thing. But what if the gods were to give you back 1 hour a day to spend in your business, spend in yourself, uninterrupted? What would you do with that hour? And as you imagine what you would do with that hour, think about how valuable that would be for you. How much would you pay to be granted that wish, to have 1 hour more a day to do whatever you want to do, whatever you're passionate about, whatever will help you grow personally and your business? And then you translate that into the work you perform for your customers. You translate that into your accounting service, into your consulting services, into your legal services, into your marketing services, whatever it is that you do for a living for your customers. So if you are able to put your client in the mindset of what would I do with that extra hour a day? How much that would be worth to me if that wish was granted to me? And then you as a service professional need to figure out how do you insert yourself in such a way that you are the one that actually grants that business owner that extra time back to do whatever they want. And once you get into that mode, that's what I call the value creation mode, where we simply 100% concentrate on generating that value for that customer, where at the same time, the customer, all they're going to do is get more time back to do whatever they want, but they're the ones that are going to create the additional value. You as an accountant, as a marketer, as a lawyer, whatever, you probably don't think you create that much value with what you do, because what you do is very finite. But when you give them time back to do whatever they want to do, that has a dynamic number, and that number means more to them than it means to you. And that's a really important thing. Like, you as a accounting professional or consultant, whatever, you can't say, well, my customer's extra hour a day is worth $100 an hour to them. You can't determine that number. Your customer is the only one that will determine that number. And they will not give you that number. But when you think about it, it's almost invaluable. So they can't give you that number. But as long as you understand what they're thinking, what they're going to do, and that's worth to them, that's when you as a service professional turn into what I call a value pricing business model, or a value-driven business model, where all you're doing all the time is figuring out what you can do for your client that gives them more time to do what they want to do. And then you price your services as close to that number as possible. And again, we don't know what that number is going to be, but if the client pays for it, that means that number was lower than what the client had in mind. So that's a really important piece of it, right? So if your customer is willing to pay $1,000 for your services, $2,000 for your services, whatever you're giving to them is worth more than what they're paying you. So the only way to truly know what your services are worth to your customers is whether or not they pay for it, which is why in value pricing, we talk a lot about options, okay? When we are trying to figure out how to price our services, once we understand what the customers want as a whole, then we want to break down those wants and those needs into 2 or 3 buckets. I think most school of thoughts recommend 3 options, 3 buckets, right? The one bucket that provides the minimal services that you're willing to do, that you can do a great service for, that will meet the minimum requirements of what they called you to do in the first place. So that's going to be your first package, and that's going to be, let's say, $500 a month. Then you're going to build the largest package, or the third option, which is the one that's going to meet everything you talked about, plus a whole bunch of bonuses that will make you the best service professional that person has ever had. So you package that into the third package, or the third price of the options. And then you figure out one in the middle that is just sort of somewhere financially, somewhere along the lines. And it does sort of best of both worlds. It meets some of the minimums and it has a couple of features of that third highest one. And you price that somewhere in the middle. So let's assume, as I said, the lowest option is $500. The highest option is $2,000. Then the one in the middle will make it maybe $1,200. So once you give the client those 3 options for those 3 services, after you had a deep value conversation with them and understood what they wanted, and you had them imagine what they're going to do with that extra hour and all that stuff, then you frame it. You give them the framework where the client now it's within the capacity of saying, okay, you can provide value to me 3 ways. We have the minimal value you can give me, which is going to be $500, meeting these checkpoints, this scope of work, this tasks or whatever, this finite number of results. And then there's this highest possible value you can give to me, which has a plethora of things that you're going to do and results you're going to guarantee for me. And then the one in the middle, and it becomes just really easy for the customer to know what to buy, what to choose. And that changes the conversation from, will you work with me, to how you will work with me. And that's a really important piece. I think a lot of service professionals make the mistake of just giving people one option, one price, one service. And then you have a 50-50 chance, right? The client can say yes, or the client can say no. But when you give them 3 options, right, they can either choose one of the 3 or say no. All of a sudden you have a 75% chance that they'll pick something from you. The other piece that is important is those options set the expectation that if you want more, you have to pay more. So there's just a whole bunch of techniques that have to do with adding value before you meet your customer. This has to do with your branding and all that stuff. Adding value through the conversation, which has to do with understanding what they need. Adding value through the service delivery, which has to do with understanding how the client wants that, the work product of your service. And then adding value through constantly reviewing and discussing with your clients your performance, their performance, how they feel about the work, asking them for referrals, and that's basically a whole cycle that we do over and over and over. So that is, in a nutshell, the value pricing mindset, the value-driven business model. That is going to be different than the hourly business model that we talked about earlier. Because if you actually take that value pricing, value added business model in there, and you go back into that spreadsheet that I was talking about earlier, we no longer care about billable hours, about our capacity, our effective cost per hour. We're not looking at those numbers anymore. And it is possible that you're going to be value pricing, or you're going to be pricing based on the value you provide, or fixed fee pricing, whether or not you do full value pricing or not. And then you're going to figure out whether all the customers that pay you enough to pay for your overhead. And maybe you're making money, maybe you're not. But gradually, what you're going to do is you're going to adjust and adjust and adjust until you price your services high enough that you can actually beat that artificial ceiling that you created with the original hourly pricing business model. And this takes time. If you're already in practice, if you've been practicing for a couple of years, this transition could take you a year, it could take 2 years, it could take 3 years. It is my third or fourth year in it. I'm still going through the transition. I still have a couple of projects, a very select couple of clients that I still charge by the hour, especially if I do 1 or 2 hours and that's it. I still have a 1 hour rate and a 2 hour rate right there in the bottom of my email, just so to give clients some context of what it's like to at least work with me for a little bit. So I have that rate still. So I'm an advocate of value pricing, but I don't respect it 100% in terms of following all the rules, just because I still consider myself transitioning to value pricing. So you can start with an hourly business model, and that's okay. All hope is not lost. You transition little by little by being value driven, by understanding what your clients want, by charging fixed fees, by giving them options, and eventually you completely sway away from hourly billing, and you will hate it. I hate it. I don't like hourly billing. As a matter of fact, when it comes to the work my employees do, we do 0 hourly billing. I don't have a rate from any of my employees or my team members. When we get them involved, we always flat fee, try to value price every single package or service. Oddly enough, the only one that still charges for 1 hour or 2 hours, that has an actual hourly rate for 1 or 2 hours, it's me and my partners who do sort of the most complicated work. And even so, there's only a few clients or a few situations that we still charge like that, at least to get our foot in the door. But we always offer projects in fixed fees and in options. So that's the business model. Now I want to talk about some of the whys in terms of your customer. Now, a lot of people think that value pricing, it's about making more money for the professional, right? It's all about the professional making more money. And that is not what the philosophy is. The philosophy is that if the professional makes more money doing so, it is great, and it is expected that you reap the benefits of doing better work. But value pricing is about only doing work that the customers value above the amount that you're charging. Okay? Only doing work in which every single customer is not just satisfied, they're ecstatic by the fact that you are the first service professional that guarantees a result, and that result is worth more to the customer than the amount they're willing to pay. And there's so little amount of professionals that work that way, that concentrate on working with clients, and that way have that philosophy or that business model. So by you doing so, you're gonna be a great differentiator. You're gonna be able to stand out, and you're gonna have all tons of loyalty, because it's very difficult for a customer that you value priced and you deliver the results, and the price was agreed up front, and the price is below the value that you're providing. How are they gonna leave you? It's just not. It's just not possible. It is not possible. And can you get this wrong? Yes. Can your effective hourly rate be lower when you charge fixed fees? Yes. Can you lose money? Yes. That's the risk of changing business models. And I cannot guarantee that it will work for everyone. But if you stick by it and you keep going, you keep adjusting, you keep churning, you keep studying it, and you concentrate on attracting clients that are looking for more value. Okay, because one of the things that this model of philosophy does, which is the most valuable piece, is it helps you as a professional change your mindset and change the way you think, change the way you approach new customers, you approach relationships, change the way you treat your employees. And over time, it's a great personal achievement to be able to transform an hourly based practice into a value driven practice. So I'm going to strongly recommend that you read up on this, study it as much as possible. I actually have a webinar that I'm teaching this. If you go to valuepricing.net, you can access that webinar. It's going to be a 3-hour webinar where I explain specific techniques, processes of how I do it. Most important, to give you some framework and some examples. But this is all going to come from you, how you price, how you approach your business, how you approach your clients. That should all be customized and unique to the way your business works. But I think in this webinar, I'll be able to share with you what I've done in the last 5 years, how I've done it, what has worked and what hasn't worked. And hopefully you go through the same transformation, or you go through the same steps of going through this transformation of business model in your own business. Thank you.